Hello, folks. Yeah, welcome to another analysis within the week of October 20 to October 24, 2025. So we are still within the week, and we want to share with you where we left off in our last video. In our last video, we told you guys that we are still in consolidation, and we had to wait to see if buy side will be attacked or if sell side will be attacked with this equal low. And from the look here, we can see that price actually attacked buy side liquidity on Monday. This is a 4-hour time frame. As you can see from the screen, price attacked buy side liquidity on Monday, just as we had anticipated. Remember, we do not predict, we only anticipated with these arrows I drew in the last video. So I am going to attach the link to the previous video so you can watch and see how we anticipated this move. So here is a 4-hour time frame, and let's switch to 4-hour time frame. And now in our 4-hour time frame, and according to our forex calendar, our forex calendar help us to see that in our forex calendar, it helps us to see that there is no news on Monday, there is no news on Tuesday, there is no news on Wednesday, no news on Thursday. We only anticipate news on Friday. So Monday we usually do not trade if we do not see A plus setup. On Monday, we don't trade if we do not see A plus setup. And how do we anticipate A plus setup? We need to see if price has mitigated, has tapped on H4 PDRA. What are the H4 PDRA? External high and external low, equal high and equal low, fair value gap, order block. These are the few PDRAs we strictly focus on. We don't need to focus on too many things. No, we strictly focus on these areas. We limit a lot of things that we streamline our focus on. And here we can see that this is a 4-hour time frame. Price has attacked buy side liquidity on 4-hour time frame. You can see here price had attacked buy side liquidity on 4-hour time frame on a Tuesday. You can see it had attacked on a Tuesday because if you switch to daily time frame, look at it. Monday didn't attack, Tuesday attacked, and after price had attacked the buy side liquidity was mitigated, tapped on the buy side liquidity, we need to see if there was a change in state of delivery or if there was a market structure shift. Market structure shift and change in state of delivery, usually they tend to look like the same thing, but they are two different things entirely. But you need to understand them. There are a lot of videos on YT which you can check to understand these two scenarios. Now, this is our Monday, this is our Tuesday. If you've been following me, you will notice that this is how I analyze my charts on simple analysis. So Monday didn't tap on the H4 PDR, which is our external high. Tuesday tapped. Then after it tapped, after liquidity was grabbed, this is our liquidity. This is our liquidity grab. After our liquidity grab was tapped, what do we now wait for? We wait to see if we are going to see change in state of delivery. And how do we identify this change in state of delivery? We can only identify change in state of delivery by looking at the previous swing low before this run up here. If you have been following ICT, you will know this is the step in which it takes before a trade is being entered. You need to look for the previous swing low before this liquidity grab. Why? Because this swing low is what pushed the market to grab the liquidity. So once a buy side liquidity is grabbed, look to your left. Where is the previous and latest swing low? And if you look at it, you can see this is a swing low, but we didn't take that. This is the swing low which caused this run up here. So this is a swing low that causes run up. So we need to wait for market to close below this swing low before we can actually say yes, a change in state of delivery or market structure shift has occurred. So as a trader, you need to draw this out to the future. Draw this swing low out to the future. Drawing this swing low out to the future, I need to pull up this line in order to make our charts very clear. So this is our liquidity. It grabbed at Monday high, took out Monday high, and also took out this external high. So we were in consolidation. So we can say this liquidity being grabbed here has took out this consolidation. So we want to anticipate the next move. We draw this outline to the future and we wait to see if price will close below this. If price closes below this signifies a change in state of delivery, or what other people may call it, market structure shifts. Now we wait to see down candle form, down candle form, down candle form, this candle, this down candle that closed below here. Remember, you need to know how candle formation begins. The candle started here, candle started here, went up, came down, and closed below here. So this is the down candle we always want to see, that closes below these swing points here. So this candle validates our change in state of delivery. So after this validation, what do you have to do? You can come and place your sell trade. Place your sell trade here. Where will your stop loss be? Above this high. That is where your stop loss will be. Because now we are anticipating that a new high of the week has been created on Tuesday. And according to our weekly profile, if this occurs on Tuesday, this is classic expansion. Classic expansion. So we place this stop loss here, your entry here, then you allow market to do a thing. Yes, market is going to gyrate just like it's doing here. It will not go. Why will it consolidate this way? Because before this liquidity grab, markets expanded. And according to ICT, market has it face expansion, consolidation before another expansion. So as market moves, it needs to rest. Just like when a bird flies up, it needs to rest before it starts its journey again. So market expands. We anticipate there will be a consolidation before this move. So now you place your trade here, choosing whatever risk you need to choose. And what did market do? Market kept consolidating, consolidating. Then on Wednesday 9:30, this is 10 a.m. On Wednesday 10 a.m., markets expanded. And remember, all I always risk is just 2%. I risk 2%. I risk 1 and get 2. That is what I risk. I risk 1 in order to get 2. It means that if I risk $10, I am expecting to get $20. That is how I risk, because I have studied NAS 100. NAS is a kind of pair that moves very well. So no matter what you do, NAS will always give you 2R of what you risk. This doesn't mean that it occurs like this every time. Trading is a probability game. So if you take 10 trade and you risk 1:2, just know that out of 10 trades, you have 7 going in your way. This, so if we risk 80%, we're expecting to get times 2 of that, which is somewhere around here. Somewhere around here, or somewhere around here, or here. But whatever it is, we should expect to get 160 or thereabouts, or 190 or thereabouts. So you do your calculations yourself. Do your calculation yourself. But the best is to always expect only 2R. And you can also use your Fibonacci tool to anticipate where market is likely going to give you a 2R. So this is our Fibonacci tool. We draw from the high to this low. This is our 2R. And you can see it aligns together with a fair value gap. It aligns together with an expansion. This expanded. So we anticipate that price will always come down here. This is PDRA, fair value gap, fair value gap, fair value gap. So this is our 2 hours. So this is where we take our profits. And even if markets has done over than what we expected, that is not our concern. Our concern is we've gotten what we want and we are out of the trade. So looking at this trade, this was a classic expansion on Tuesday that occurred. So the, we anticipate this by following our rules. Although there was no high impact news on Tuesday, that doesn't mean you cannot take a trade if you see your A plus setup. You know, you need to wait to see if price aligns with your trading rules. So if it aligns, you take the trade and you record it down. So you can see that price actually did 4R, but that is not our concern. Our concern is we have gotten what we want and we are out of the trade. So today being Thursday, we have today being Thursday, there is no news on Thursday, but we anticipate CPI on Friday at 30. CPI on Friday at 30. So if there is a setup, we can take. If there is no setup, we touch the grass. So this is how to capture moves that can give you continuous profit as long as you follow your trading rules. And also this price had done 50% is this range before reversing this way. So let's measure and see if actually it is true. From here to here, you can see price did 50% before reversing. These are simple trading foundation that you can learn from watching ICT video. So this is how far we've gone. We'll keep analyzing and we'll keep posting our trade, and we'll also keep showing you the step by step on how to capture this single move. If you like my video, please do well to subscribe.